My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. So suddenly it's all bad? The demand, the excitement, the reopening, the stimulus, all bad? The growth is troubling, if not catastrophic? We're told we have to sell now because things are so good, it means someone has to get hurt. That's the party line on a day where the Dow ultimately gained 20 points after being down huge. S&P tumbled 0.67%. NASDAQ nosedive 1.88%. No recovery in tech land. But before everyone decides collectively to go jump off a building, let me try to explain this confusing moment. Maybe you won't. Right now, the market's having what I regard as an old sports writer from the days when I covered football at Florida State. It's having a quarterback controversy where you don't know who's number one, who's number two. This is the last thing you want in football. It's currently happening with the Green Bay Packers. Potential Hall of Famer Aaron Rodgers so unhappy that he joined David Faber in guest hosting Jeopardy! Today, we got a quarterback controversy in the federal government. Treasury Secretary Janet Yellen came out of left field, or I guess the end zone, and implied that the Federal Reserve may have to raise interest rates to keep the economy from overheating. Remember, she was the last Fed chief. This comes only 1 week after Jay Powell, our current Fed chief, said that it's too early to raise rates because, well, we're still a long way from full employment. Doesn't it feel like we got two quarterbacks? For Yellen, I think it's reminiscent of her worst call at the Fed when she decided to tighten in December 2015 after years of low rates. She said she wanted to contain inflation. Within 6 weeks, the inflation balloon had collapsed, and she did some real damage to the economy. Fortunately, Powell is the one calling the shots now, not Yellen, which brings us to the second conundrum, inflation. Pretty much every commodity is running right now, and that's bad news for most companies. But there are some winners, too. Think Freeport, the copper company, or steelmakers like Cleveland-Cliffs and Nucor. They're doing the same thing they always do, but their selling prices keep going up. That gives them what's called operating leverage, where any uptick in revenue produces a gigantic increase in earnings. Then there's another kind of company, something like a DuPont, okay? Specialty chemical maker with exposure to semiconductors, autos, and housing. DuPont reported a monster quarter today, but the stock barely budged. Why? Because even though the company's putting up great numbers, its raw costs are surging too. While they can pass those costs on to their customers because demand's so great, it's obviously not as good as straightforward inflation winners like the copper plays and steel. Finally, you've got the pure inflation losers. Most businesses fall into this category, sadly, but some are worse than others, like Kroger or Albertsons. Their margins are so thin to begin with that any increase in raw costs can be devastating. Something Goldman Sachs pointed out today in a pair of prescient downgrades. Now, if you're thinking a 1 out of 3 ain't bad, remember that there are very few stocks in Group 1. The pure inflation winners. Tons of stocks in Group 3, pure inflation losers. Next up, there's the great tech conundrum. Let's keep it simple. Look at the beaten down semiconductor stocks. Now, this may be the most puzzling group in the market. We know that demand for chips is off the charts. We know that there's a shortage. So you'd think that their stocks would be flying, right? Because the underlying companies are practically printing money. That was the narrative until 10 days ago. Now the semiconductor stocks are in the doghouse. Why? Because a shortage creates the seeds of its own destruction in two ways. First, no chip maker benefits from the shortage. Listen to me. Take something like the F-150, all right, that Ford truck. Last month, Ford made so few of these versus the previous month. They made so few that it was frankly unsettling. I'm going back and forth with Phil LeBeau about this. I mean, it is a fraction of how many they normally produce, and there's demand for all of them. Now, see, there are lots of chips that go into these things, but only some of those chips are holding up the process, the supply chain. If you sell the other chips, well, then you had a real bad month because the ones that couldn't be produced. We might make 18 million cars this year, thank you, Phil, and that would be the most in 16 years. Still, this quarter will be hurt if you make the chips for those machines where production is stalled by other semi companies. Second, and much worse, right now, everyone in the industry is running around screaming that we need more production capacity. So what if that comes true? What happens if we build all the semiconductor foundries that Intel CEO Pat Gelsinger endlessly squawks about? I'll tell you what happens. We'll be flooded with chips. Pricing will collapse. Cycle will be over. If you're worried about the new capacity, it makes sense to sell the semis now. Okay, I want to throw in all the instability in the Strait of Taiwan, which is where we get a huge chunk of our chips. Remember Taiwan semis there? The People's Republic of China wants Taiwan back. And lately they've been making some incredibly hostile gestures. These endless flyovers by their Air Force. I don't think they have the ability to actually conquer Taiwan. Maybe I'm too much of a sentimentalist. but with the U.S. carrier group in the area. But they could hold some naval exercise that disrupts shipping, making the semiconductor shortage worse. It's not going away. President Xi is not going away. Each of these scenarios is bad news for the chip makers. What we need is a smooth transition out of the current shortage into a period of consistently strong demand. But it's more likely the industry overcorrects by adding too much capacity. You just need to watch the semiconductor capital equipment makers, Lam Research and Applied Materials. Their stocks will actually tell you how this ends up. They're the ones that put it on your screen. They're now in the same position as the copper and steel companies. They can charge whatever they want, even as their costs pretty much stay the same. But we don't know what's going to happen. Those are the ones to buy, though. We know the semis are an extreme case of demand overwhelming supply. But this is happening to a lesser extent all over the economy. We're seeing it in appliances, lumber, tools, aluminum, corn, refined product, freight, cars, paper, chemicals, plastics, you name it. That's practically a whole shooting match, isn't it? Which brings us back to the quarterback controversy. Janet Yellen's thinking about the need for rate hikes because they slammed the brakes on the economy, slowing down the purchasing power of everyone and everything, which then allows the supply chain to play catch-up. But if that happens, you'll end up with a situation that's abhorrent to the bulls. 2022 will be worse than 2021. That's right. It'll be a dreaded down year. Now, Jay Powell, on the other hand, believes we can handle all this inflation because over time it will gradually take care of itself. Plus, he thinks the cure, raising interest rates so the economy, might be worse than disease. Powell wants us to get back to a tight labor market in order to help the downtrodden who haven't been able to benefit from the current boom. True. Man, oh man, am I ever with Powell. Speaking of the boom, as J.P. Morgan's Jamie Dimon explained at a conference today, booms are good. And that there's not necessarily too much of a good thing. We've yet to experience classic demand destruction where prices get too high to sell for anybody to sell things. Oh, it could happen. I don't see it happening now. Right now, though, even though I can totally see and feel inflation from all sides, I'm sticking with Jay Powell as my quarterback. Sooner or later, the plastic plants will come back online. The semi companies will add more capacity. The president will make trade deals to bring in more raw materials, and things will solve themselves. In the meantime, though, here's the bottom line. I need you to recognize that we're in a forgiving market. Investors like to buy high-quality stocks that go down. Soon we'll remember that most semiconductors aren't commodities. There will be winners and losers. It's our job to try to pick the winners, just like buyers pick the industrials at the bottom of today's market.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.